Good morning, everyone. Before we start, can I just check if everyone can hear me clearly? If you can, please type 1. Thank you for your response. And I see there are quite a lot of responses right here. It's great that you guys can hear me clearly. Welcome to our MQ Traders webinar on Singapore Market Overview and Outlook. I'm Rob for today's event, and right here we have Mr. David Mock sharing with us as well. Now, let me introduce who and what is MQ Trader first. MQ Trader stands for Malaysia's Quantitative Trader Group. We are an independent trader group that uses quantitative methods to perform analysis and decisions in stock trading. In our effort to bring the quantitative trading strategies to our traders, we have developed the MQ Trader Stock Analysis System and made it available to all our MQ members. And this is how our MQ Trader Stock Analysis System looks like. We've included wonderful trading strategies in it, and it can compute buy and sell signals based on the strategies that we included. They appear as green and red arrows right there. And with this system, our MQ members can conveniently access all these trading strategies and identify any possible trends in just a few clicks. In short, MQ Trader is a tool that brings what the institutional investors have to the retailer's hands, and this enables our trader to make quicker decisions and with greater confidence because they are getting access to a steady stream of both information and also trading strategies. It's like what Warren Buffett says, an idiot with a plan can beat a genius without a plan. So it's very important to plan your trades ahead by referring to a reliable tool just like the MQ Trader Stock Analysis System that compiled wonderful trading strategies for you. If you are excited and interested to use this tool, you just need to become an MQ Trader member. You can sign up to be our MQ Trader member via the links in the comment section. Do sign up now as this is very important for my next point. Why is it so important? Because for those who have already signed to be an MQ Trader member, who have a trading account with us, and have RSVP with us, you can claim 300 MQ points by the end of this webinar. All you have to do is complete a short quiz that we send right to your email after this and submit a screenshot of any part of this webinar in the quiz. For those who are yet to register for MQ Trader account and already have a trading account and have RSVP as well, you may sign up to become our MQ Trader member through the links in the comment section or scan a QR code right here on the screen. And by doing so, you can also claim these 300 MQ points. I also want to highlight that to sign up for an MQ Trader account, you just need to fill in a username, email, and password, and that's it. So sign up now if you don't want to miss out on your rewards. Before I go any further, I'd like to check how many of you are interested in opening a trading account with us. If you are interested, you can type 3 in the chat box. Now, thank you. And for those who are interested, you can send us your contact details through the links or private chat. And our support team will come to you shortly to guide you on the account opening process. If you sign up for a trading account today, you'll get an extra 500 MQ points. This trading account will allow you to trade in Singapore and some other countries as well. Most importantly, it's free to open a trading account with MQ Trader because we will cover the account opening fees for you. And just to highlight that the 500 MQ points are only limited to people who sign up today. The points will be credited to you once your account is successfully opened. All you have to do is send us your contact details through the open account links in the comment section or scan the QR code right here on the screen. And our support team will contact you shortly to guide you on the account opening process. Furthermore, when you open a trading account with us, you'll be entitled to get all these exciting benefits. So why wait? Just sign up today. For more information on the benefits, the links are on the screen. Next, this live webinar is available on Zoom and our Facebook page. Do share our Zoom or Facebook links with your friends so they'll be able to learn more about trading in Singapore market as well. And there will be a Q&A session towards the end. You can type your questions to our speaker at any point in both Zoom and Facebook Live. Our MQ Trader team will compile and send them to our speaker. Lastly, we'll be sending out today's webinar recordings to all who register for the event. For those who have not registered for the event, you can register now by providing us your email address via the comment section, or send your request to MQ Trader's email or to our WhatsApp number as shown on the screen. You can also view our previous webinar recordings if you want to learn more about Singapore REITs. The videos are up on our MQdemy and Facebook page as well. You can visit the link or scan the QR code right here if you want to rewatch them. Today, it's our pleasure to have Mr. David Mock sharing with us. He's someone that comes with an interesting breadth of experience in the financial field. He's currently the head of investment and research in the IPP Financial Advisors, where he manages various portfolio strategies for different risk profiles. The portfolio that manages in the IPP Financial Advisors is over $1 billion US. It is truly an honor to have Mr. David share with us on the Singapore market, and I hope all of you will be able to grab a nugget of knowledge from the webinar today. So without further ado, let us welcome Mr. David Mock.
Okay, thank you, Robin. Thank you so much. Let me share my screen so we can start here. Let's see, while I bring up my screen. Okay, Zoom is preparing my PowerPoint. Before I start, first of all, I'd like to thank the host, MQ Trader, for inviting me to give your a bit of insight to Singapore, at least Singapore, how to invest in Singapore. And you know, in my brief correspondence and talking to both Robin and Ying Hui. Ying Hui is the lady that's behind all these things. You don't see her, but two of them are very nice people, and I really appreciate what they're doing, especially with MQ Trader. You know, if you're after this session find this talk useful, please, you know, help them out by, you know, signing up or doing some trades with them, you know, things like that. I tell you why. Because in the investment world, you know, for us as fund managers, we have a few brokers. We don't just hang on one broker. I probably have a few brokers as well. Anyway, so what we do is that if the brokers help us give some ideas, or, you know, give us some bringing some talk, a person come and talk, and we listen, and we appreciate them. So what you do is that in gratitude, we trade with them. We allocate some of our trades through this particular broker, which is very nice to us, and that's what we do. Yeah, it's a very gentlemanly thing, and it's very nice, you know. So this ecosystem in this finance world, at least this financial world, it's actually very nice. I mean, it's actually very nice people. Each one trying to do their best, helping each other out. So if like I said, if you guys find this session useful, do sign up for MQ Trader, or some of your trades otherwise we would be doing anyway. Yeah, so give them a thought. Okay, second thing is that I'd like to thank you for coming in. It's just a Saturday morning, you know. It's like Saturday morning, who would turn up? But hey, as I look at participants, or 60 over, of course, about, you know, a handful of staff, but around about 60 of you have tuned in on a Sunday or Saturday morning. So look, you know, we appreciate what you are doing, and what I can say is this: your determination and your commitment of spending your time to know more about the stock market can only do one thing, okay, which is to help you go forward in investment, and therefore you'll likely be more profitable going forward than most other people. Yeah. So first, just congratulations to you for coming in. And just one thing is that look, I'm here to help everyone. I'm here to talk and share what I can, but I can only do my part. What I can't do is to answer your pertinent questions. In other words, if you really want to take something away from today, please ask questions. Yeah, I mean, I don't know. I've given so many talks, but I find that those who ask questions would likely benefit most, because in our learning pedagogies, it's the discovery part that really internalizes our understanding of market. I hope you know what I'm saying. In other words, ask questions, because asking questions will help satisfy, first of all, your queries, what you want to know, because whatever I say today may not be what you want to know. But so I'm here all for you if you want it. This is so the last quarter of the hour. So the structure is this: 1 hour. I try to compress my talk as much as possible. It's almost a 45 minutes talk, and thereafter 15 minutes of Q&A. And so yeah, so if you could, gather your thoughts and send in your Q&A, your questions to the moderator, and the moderator will let me know what the questions are. Okay, so I'll try to compress it again 45 minutes of my talk. Okay, so without further ado, thank you once again for coming in. Okay, so today, as the title and as why you came for, is about simple markets, Singapore market overview and the outlook. So how does it look like? And especially for us, right? Today, do we want to go into the market? Do we want to invest in it? Okay, so big questions. Disclaimer, I have to give this disclaimer, I apologize, but it is what it is, right? In other words, wherever I speak today, it's a educational presentation. In other words, I just tell you what I know in our education. So it's not advisory. Yeah? So whatever it is, don't take this as advisory. So if you do need advice, do consult your advisor, someone whom is qualified in your jurisdiction, and thereafter consult them. Yeah. So please don't construe anything as advisory, but certainly it is of education. So this is our disclaimer for today. Yeah. Okay. Think about this. A bit about me now. Okay. So I know Robin did explain to you what I am, my breadth of experience. The thing is that I have to tell you that because you see, right now, while I was the head of research in Singapore DBS, so I sort of more or less know about Singapore. I've moved on to do global equities and global bonds. So actually, I'm doing quite a fair bit of things. So please ask your questions. Anything about the market, investing, and all. Yeah, I do my best to help you through your questions. I hopefully satisfactorily answer your questions. So that's why I am. So okay, yeah. So that's my bio data. Okay, so this 45 minutes. What am I supposed to cover, or what we hope that you gain back from it is that, first of all, the landscape of Singapore stock market through a lens of STI. I mean, that's the best way to do it. There are many ways to look at it, but I choose to do it this way because it brings a person quick smack right into Singapore and what it's all about. Yeah. And the vibrancy of REIT sector in Singapore, you would know about this already. Singapore is very, very popular when it comes to REITs. We can talk about that. And then are there gems out there today? Can you invest today? Given the conditions of the market, the US market has gone so high, so much, and it's coming off now, teetering, don't know where to go. There's still gems out there, certainly in the Singapore market. Let's get started. Yeah. Okay. So let's start with STI. What is STI? I know, okay, this part may be a bit boring to some of you, but it's good to know. The more we understand indexes, the better it is, because with that, it gives you a window into the ETF world and how it works, why it's good, why it's not good, why it's exciting, why it is maybe a bit boring to some, but it is what it is. So anyways, Straits Times Index is a market value weighted index comprising of 30 main board listed companies. Now, some indexes choose to have a lot. For example, S&P 500 to 500 of them. NASDAQ even more, but NASDAQ have that since then figure a way how to reduce it to 100, so the NASDAQ 100, so on and so forth. So they choose this large cap stocks, hoping to represent the movement of the market. And interestingly, if you take all shares and all the shares together and the usually the main index, you notice that the movement is more or less correlated and it's not too fast. So that's why they choose 30. It's easier for us to handle and therefore for us to analyze. The index is calculated, is done by FTSE in partnership with SPH in Singapore and Stock Exchange. So STI is widely followed by investors as a benchmark for Singapore equity. So in some sense, when you wake up and say, oh, look at how Singapore is doing, first thing you look at index, right? Similarly for Malaysia as well. So we look at indexes to figure out where the market's moving. Yeah, not like, oh, how's the tech stocks moving? No, not general. Because why? Because we as retail, we tend to look at in general things, not because it's easier to handle. It's easier to handle the general market. I'll come to it later why, and that as opposed to individual movement of particular stocks or even sectors. Okay, so quickly, these are your 30 constituents from ascenders all the way down to Yang Zijiang. I guess this is quite varied. You have your 10 top constituents in Singapore, largely are banks, and you have your telecommunications, and you have this Hong Kong company, Jardine Medicine. Some of you know about it. Then, of course, you have the REITs coming up with Ascenders REITs and Capital Land Integrated Commercial REITs, and it's the two largest ones. In fact, if you can recall, those who follow REITs in Singapore, those are the two ones that started early. Of course, Capital Land Mall has moved a few things already in sense that it has evolved into a larger entity by now. Yeah, so that's the 10 constituents. Okay. Then you have the sector breakdown. So in other words, in this index, if you were to look at Singapore, you know that at least the index is widespread. It's not only focused, let's say, on tech or on REITs or real estate. It's a broad. When you invest in Singapore, that's opportunities for the whole entire market. Yeah. So it's not too skewed. So if you were to dive into all the shares in Singapore, hey, guess what? There's 682 of them. Yeah. So a bit of trivia, those collect trivia, 682 stocks in Singapore, you can choose any one of them. But again, the STI 130, it quite mirrors the movement of the entire market. Of course, being its size, its capitalization, it does make it look as if it's almost the same. So there you go, over 600 stocks in Singapore. Okay, moving forward. So that said, that's the broadly about STI. Next question is, what is interesting in Singapore? This one thing, a recent development. I can say recent because it started in 2002, 20 years ago. So look, the reason I say because that's when I started. In the early stage of my career of this, and wow, it's 20 years, man. Okay, so a bit of background is that when I was at DBS as a head of research, I helped to bring out these the earlier trusts. What we did was that we went to look at the properties there. Then we developed the model for it, and we go around the world selling these REITs to the rest of the world. So to a lot of fund managers around the world to say, look, Singapore, it's a good REIT place to go. So it all started then. Yeah, so that's, tells you how old I am, right? So anyway, there you go. REIT Hub started in the REITs in Singapore started in 2002. When it first started, it isn't very popular, but now, of course, it's so popular now that for the first REIT successfully launched was its Capital Mall Trust, right? So since its capitalization jumped more than 16 times now. It's even more than this now. This is old data, but there you go. That's how REITs have evolved and grown over time in Singapore. Now Singapore REITs have grown steadily. If you don't know, they account for a majority of IPO proceeds in the past few years. Yeah. And more importantly, the REITs structure in Singapore is not focused. Sometimes we buy into a country, we think it's just local, that the business is local, but it's not. Yeah, some of the REITs in Singapore is already extended beyond Singapore, like Australia, China, they have pockets of properties all over the world. So when you buy into a REIT, please dig underneath, look at the properties. If you're happy with the properties, then hey, look, I think it's worthwhile to put your money into these REITs here. So you can't run away when it comes to Singapore, when it comes to REITs. So okay, so I'm going to pause here. I'm going to explain a little bit of REITs. Now, REITs, it's actually a very interesting instrument to hold, because one thing you want to know is that because it is a trust structure, it is more transparent than most than usual companies. For example, you have an ABC company and doing steel works, let's say, you don't know actually what's really going on behind in terms of their relationship with their clients, the customers, price of the iron, the ore that's coming in from the do the steel, whatever. It's a lot of opaqueness in the business unless you are in the industry to understand what steel business is all about, and therefore you can make a good judgment of the steel business and therefore the company. That's why property is more transparent. All of us, you and I, can easily get into data to see the value of a land. You and I easily understand economic condition. For example, is the economy doing well in Singapore? You can tell it's no, so it's more transparent. And when there is you understand the economy, it filters down to the properties, be it retail property, be it commercial property, or be it industrial. So in that sense, there's a lot of transparency. I think it's a better transparency for us as investors when we look between REITs and other companies. So that's one good thing about the REITs. The second good thing about a REIT is that there is, there is distribution. The distribution is based, of course, on the income, and income is on rents, and rents is transparent. We know how it is. So it's easier to figure out property REITs. In Asia, all of us like properties. We all seem to know what's going on about it. So if we want to translate your knowledge of property into investment, REIT is a good way to go. And you get paid. You get compensated every year. It's not too bad, I know Malaysian interest rates are higher, but you get good 4 to 6% returns. Today, as we speak, if you want, you look into some of the REITs. So you get compensated every year while you express your view or your property view on things, and not just in Singapore. As you can see, you see the map there. It's actually quite a fair bit all over the world, right? Let's see. You get not just Singapore, you have Malaysia 6 trusts there, India 2 trusts, Hong Kong 2 trusts, South Korea 5 trusts, China 10, Japan 7, and Vietnam, and so on and so forth. You can see that, yeah. So so it's quite vibrant. If you want to, if anything, you want to peep in Singapore about REITs, there you go. 42 REITs in all in Singapore, about market cap about 111 billion in all, yeah. The next slide is interesting, which I'll tell you about the growing properties that it's on offer in Singapore. So not just Singapore, as you can see, slowly it goes. It grew right to Asia Pac, and finally right now it's got US REITs as well, and also and European REITs. So there you go. So it's a wonderful place if you want to get into, and it's very transparent, like I say, because of the business itself, because it's a trust, and therefore it is worth taking a look at. Yeah. So that's one thing we look at, and then next, yes, the yields. Look, like I mentioned earlier, you get compensated while you wait. You look this. So if you understand property, you would, right? So property is that it is an inflation hedging asset. So over time, you'll see it growing because the value of money decreases over time because of inflation. And guess what? Your property, the underlying property goes up as well. So while you wait for the underlying property to grow and therefore the value of the land to grow and therefore the value of the trust to grow, you get compensated. In this case, on average, about the 42 as REITs and property trusts, you get 5.5%. So it's not too bad. I mean, those people who are, all age, look, 5.5 plus capital gains over time. Hey, in 7 years, you'll probably double your money. Okay, so it's just quite interesting area, a sector to look in. Okay, next. Oh, of course, yeah. Look, I'm quite aware. I'm talking to friends across the causeway. Once this COVID thing is over, I tell you, first place I'll go is Malaysia. I'll go up north. In Singapore, we're quite stuck here. We really want to travel, although we have now developed the travel lanes to Germany. And today we talk about the travel lanes to South Korea and all. I wish that the travel lane between Singapore and Malaysia opens up and then we can go up. But Malaysia and Singapore continues to be very neighbors, brothers, if you ask me. Then, of course, the younger brothers smaller and younger brothers is being Singapore. You take a look at the exchange rate. Yeah, the reason why I'm telling you this is that if you notice the exchange rate, Singapore dollar continues to appreciate against the Malaysian ringgit. Okay, that's over time since 2003. The reason why there is this appreciation of Sing over Malaysia, it's nothing to do with Malaysia, intentionally Sing dollar appreciating against, but in particular a country called Malaysia is not. For those who understand Singapore, the way the Singapore government handles and tackles inflation is not through interest rates. Unlike that in US they do that interest rates. In fact, a lot of countries use interest rates as one lever to handle rising interest rates. In Singapore, we use foreign exchange. In other words, we appreciate the dollar to a Singapore dollar to our basket of trading currencies just to stave off rising interest rates. That's what we do. So let's say, for instance, for a reason, the vegetables from Cameron Highlands coming to Singapore goes up by 10%. I mean, inflation, right? So what does Singapore do? One way, we cannot fully prevent inflation. In fact, we would like to have inflation in Singapore so that there is a stability in prices, but we don't want the 10%. We want to moderate it, and the way to moderate it is to increase the to appreciate the Singapore dollar. So that in that sense, there is a kind of counterbalance to the inflation in Malaysia. So at least the vegetables. So instead of 10% increase in Singapore, we feel it's only a 5% increase. So so that's how we do it. That's how our MAS, which is the Monetary Authority of Singapore, they do it, and over time, Sing dollar will appreciate over other currencies over a long period of time, even against the US dollar. So, if you invest in Singapore, do note this slight advantage that you probably have in terms of gradual appreciation of the Singapore dollar over other currencies. So take note of that. Yeah. So what you see in the graph here, it's actually quite intentional over time. And again, it's not particularly because of Malaysia, it's because Singapore has to do it against all other currencies to help the inflation, to mitigate the excessive inflation pressures that we get, because Singapore imports everything. There's nothing in Singapore. We only import everything we import. That's the thing, yeah. So it's the sort of things we have to live with. So take advantage of it. You understand this aspect of the slow appreciation of Singapore dollar. Take advantage of it. Put your money here, and guess what? Over time, you'll slowly appreciate. So that's a bit about the advantage of doing. And this graph is social inflation rate. And if you notice, you're smart the ones over there, you notice like that. I show you the graph, right, appreciate, and it's sort of like taper off towards past few years, right, 3-4 years. So that's because inflation pressure from outside Singapore is not that strong, and therefore you can see the inflation rate towards the tail end, where Singapore stopped appreciate against Malaysia, is because the inflation pressure externally can be contained by itself. So there's no necessity to appreciate the Sing dollar against inflationary pressures externally. So as you can see, that's why it is what it is. So can you see the correlation of the currency, at least the value of Singapore dollar? So I hope that helps in some sense, that you have, back of your mind, if you ever put money into Singapore dollar and invest in Singapore dollar, you know that there is a background, a rising tide of the currency. I'll say, I hope that helps. Yeah. Okay. That is just tell you how Singapore REITs and the 10-year returns, how it looks like. Oh, it's incredible, right? In 10 years, total returns over 100%. Yeah. So there you go. This is the general index. The dark blue line is Singapore REITs, and then the green line is the Hong Kong REITs, Japan REITs being the gray, US REITs being us, and Australia being the bluish tint. Yeah, with it. So you can see Singapore REITs is doing relative better than is corresponding other countries. Yeah. So for those people who ask, hey, why don't we go into Hong Kong REIT or otherwise? That's your answer. Singapore REITs seems to do better than the other REITs. Okay. Of course, there are reasons behind it. I don't have much, but maybe just give 10 seconds. The reason why they're doing REITs, because the REITs in Singapore is they're very active. And as a leader, it's called Capital Mall. What they've done is that they've shown that they have led the way in terms of thinking of ways how to enhance the underlying property, and therefore the value of the property goes up, and therefore the rental goes up, and everybody is following the same thing. So very active management as far as REITs is concerned. Yeah, so there you go. Singapore replay against STI. So you may want to really look at it. It's much better than the index itself. And then, of course, some of you like to play below the radar screen. In this case, below radar screen, all the mid caps and mid caps are doing very well. The mid caps of the REITs are doing very well. Okay, so gearing ratio, you all know about this. All REITs gear up, and the limit is 50%, and right now the average is what, 37%. In other words, there's some way to go. These REITs are some way to go, so there's a lot of potential going forward. Okay, so that's enough of REITs for you. That's where there are a huge opportunity there if you want to take a look at Singapore, one of the more important things. But also not just REITs, right? Singapore's got technology sector. There are about 80 entities. They are worth about 59 billion in terms of market cap for companies which is very connected to technology. Technology is the in thing for the past 2 years, COVID, right? So look, these are things you want to take a look at. Lots of it very interesting. Individually, they're very interesting. But today I really don't have time to tell you. It's all very broad strokes, but I need to get you through the broad strokes because I have to get past to the last part, just give you the gems. Is there opportunities in Singapore, right? But do note that there are very good opportunities in technology sector in Singapore as well. Okay, so this is a case study. I won't go through it. None of film. It's one of those very, very interesting. It goes down to technology-wise, how put layers of film over instruments and all. Yeah. So you can go dig into it, yeah. And that one's called iFast. iFast, it's incredibly being awarded a contract to do Hong Kong digital pension system. Amazing, right? So you may want to take a look at that. It's gone up a lot, but the question is, can it go up further? I think right now you may want to wait for earnings results to see whether it all the hype and hope that's built into the company is worth it or not. But it's again, it's technology, it's something which you guys may want to take a look at in this age of democratization of the finance. This is one company that's disrupting a lot of existing business. Well, it's been around for a long time. This iFast company has been around for a long time, but they have done very well in terms of technology. Anyway, so I got through that. I want to tell you about gems because there's something we can talk about. Yeah, okay, why? Because how does one unearth gems, right? So, we all want to know, okay, what's the tip for today and all, but I hope that I want to share with you some thinking process when you, this thinking process may help you, may not help you, but I hope it does. Once you understand it, then maybe it some crystallize some of your thoughts. Gems out there. First thing, you all know that stock tips. Your broker will call you, hey, look, Joe, this one is good because we're expecting a big order coming, and nobody knows about it yet. Please get into it before anything happens. There you go, stock tips. So the problem with top stock tips is that you do profit from it, right? So once you get in, but the problem is when you get out. So we have went through this before, everywhere, every stock exchange, every country have all these issues where retail gets in, but retailers get stuck after a while. That's it. It's still a place to unearth gems. You do trust people, you know something going on, go ahead, go do your stuff, but do know when to exit. Yeah, do know when to exit when it comes to stock tips. Yeah. Okay, so stock tips all the way to unearth gems. Analysis. Okay, so hardworking ones over there, those are listening in, 70 over, now it's grown from 60 to 70 of you. 70 of you there, I'm sure a few of you, in fact, a lot of you will do analysis work. Now, the analysis work comes in two ways. One is primary research, is you go right down into the company, you flip through the annual report, you download the financials, and you work the numbers. You project the numbers, and you do a discounted cash flow. You find the valuation. You see, hey, look, it is worth buying today? Those are very deep analytical work. Some of you do that. That's my training. That's why I've been brought up. That's what I do. In my past life, I can tell you is tedious because the way you construct, the analysis, the spreadsheet is no joke. Yeah, and then you have to talk to the company. Hopefully, you talk to the guy who makes the decisions. If it's not the CEO, the founder, you're going to talk to them, and then you also need to know all the strings that attach it. Now, analysis is very interesting. Singapore's analysis is very different from Malaysia. If you could allow me, and I apologize if I step on anybody's toes in Malaysia, is that when you analyze Malaysian companies, you need to know who is behind who and what. In other words, when you analyze, somebody is behind pulling the strings and they're attached to who, they're linked to who, and all those things. You need to know that without knowing the interesting web behind the strings that are pulling all the companies, it's not easy analyzing Malaysian companies. You need to know those things behind. Singapore is slightly easier. It's slightly where you do look at the businesses. It's less of the connections or the behind it, and you can make more accurate. I mean, you can use the word accurate. I suppose, more accurate predictions of where the companies can go, to where the share price can go based on your research. So this is very detailed analytical work. You can do that to unearth gems. On the hand, just listen to the fund manager or those analysts or brokers out there and say, look, I've done it, and you just pick it up. You do simple valuation matrices, compare across the board, and then maybe you can do a simple stuff. Yeah, but guys, hey, look, this one way. The one real way to unearth gem is do analysis work. Seriously, when you see it, you see the cash flow going, then you say, hey, look, it's something worth buying. The other way to unearth gems is, of course, hopeful punt. Yeah, I just put it out there. I don't know whether one of those punts out there will be, your cryptocurrencies as a hopeful punt. So I think some of you are getting yourself involved for cryptocurrency as a hopeful punt. Many investors struggle with it, but if I just give you a quick 2-sentence, is that one way to look at cryptocurrency compared to stocks is to look at it as a collectible. In other words, it's a collectible. Some people like it, some people don't. You'll see all the fund managers will say, look, it's not generating money, but the other guys say, look, it's making me money, on the other hand. So you got two sides to the story. It would help you if you could, in my view, it's helpful if you think about it as a collectible. In other words, so long as a willing buyer, willing seller, say that again, if there's a willing buyer to what you're selling, and so if you're the winning buyer, there was a willing seller on the other side, hey, look, price meets, and the price meets, you have your cryptocurrency. So when you sell, you better be hopeful the other guy over the other side is willing to buy from you. Okay, so that's what collectibles, if you were to place where cryptocurrency is, at least if that's how I look at it. Okay, next will be okay, so all the stock tips, analysis, and all those things comments a few things, right? It comes out unearthed gem, which is unnoticed value. So someone's unnoticed value, okay, so you go in because nobody seems to notice about it, so you hope that. So one of the things that fund managers do is that when we look for, we do all this analysis, look at unnoticed value, and when we see this unnoticed value, when we hope to spread the word around. Now, once we know that this value, then we buy first, then we spread the news, and the retail will come in. And when retail come in, guess what the fund managers do? We get out. So that's what we do. But anyway, but of course, it can continue to grow. We will need we know and discover unnoticed value. We want the rest of people in the world to know. Okay, it's not that we don't know. We want them to know, but know it after us. Okay, we want to know after us, so we buy it first, and then let you all know. Then after they all go, then go to the price point, we exit. So that's how it works. Okay, so. Another way to you notice as part of this unearthing of gems is, of course, I mentioned earlier, like event bet, some big deal is coming, or there is a takeover, or quickly, so something insider information. By the way, insider information is illegal, but if you hear, absolutely not, the hearsay seems good, okay, you do some certain bets, hey, look. So event bet is one of them. It's one of its way to unearth gems. And then the last but not least, which is the anticipation of macro events. So macro events is easier for us to handle. In other words, let's say, for example, if you think next year is a good year because of reasons being a recovery of the COVID, for return of travel, which I'll probably talk about later. So the anticipating of macro events is easier because we can see it. Not micro events, not like, okay, this company is going to get this big Facebook deal next year. No, these are micro things, and it's hardly that it's unlikely that we get hands or to this information, this sort of information. So it's likely that all of us, it's easier to pick up macro things because all of you out there, again, I'm talking everyone, you can pick up macro trends. Say that again, all of you out there, not one excluded, that you can figure out macro trends, and it's easier. You can see your eyes, you can predict, and it's easier to pick up. And especially when you're not full-time doing this, right? You've got own jobs and also, so it helps to have easy handles. That's where I'm going to. Okay, I'm going to use the last portion because I'm not going to go to analysis for you. I'm going to do the last portion, which is anticipating macro events and therefore surface opportunities so that you can think about going forward. So I hope with that, I'll prepare you for the gems ahead. So on this macro events, can I quickly go through this academic exercise with you? Okay, so those people who are needs a bit of technical stuff, okay, I'm going to go with you now, but those who can't handle it, please bear with me for just a few minutes here. And I need to bring these two together. Okay, so when you talk about price, when you hope the price goes up, therefore you see a value and buy before other people know it, so that's why you hope see a value. So the reason why I'm doing this few layers, hope you understand, is that in any value of a stock of, has few layers, so it reacts to a few layers. In other words, there's world economy, regional economy, the industry, country, and the company specific reasons why it's so valuable. Like an example, the world economy. Now, if the world dropped like last year, guess what? It doesn't matter which firm you're in. It doesn't matter, because as long as business is affected, everything goes down. That is the world. In other words, you may have done your work. Good work. Thank you. You did good job, right? 2 thumbs up. But if there is a problem with the world economy, guess what? No matter how good your analysis is, your share price will be dragged down. Okay, so that's where the risk comes in. Now, the regional economy, in other words, this area, Asia, is Asia affected? Of course, we know there's Asia, right? Saying the US versus China thing, the competition affected trade. So that's why this region is affected. But the US is doing well. Now, look, I do global. Let me tell you, this year, and certainly last year, US is a region outperformed Asia. Absolutely. Why? Because it's one of what it is, which is that there are macro events that are curtailing growth of Asia because of the trade war. So there you go. There are factors that are affected. The most I can say, the macros easier. Both of us can handle, and you can handle. Therefore, you feel more confident in the information that you have, you digest, you understand. Therefore, you can invest. Sector. Look, it's so easy. Look at the rubber gloves. So when COVID comes, all the rubber gloves go up. It's a sector specific. The value is in the sector in itself, which is the rubber gloves. So it goes up. Yeah. So country-wise, of course, look, you invest in China, you got a problem, right? Because look, China today, they like it. Tomorrow, they do not like tuition. They do not like for-profit tuition. Guess what? Hope this industry decimates. So that's a country risk. Country risk also for the banks there, the recent crisis of Evergrande. So it's all country specific because the country wants the banks to lend, and then they lend to the property companies to overbill, and there we go. So it's country specific. Company specific risks are only peculiar to 1 or 2 companies, where, for example, if a company hits a fraud within the company, the boss runs away. So that goes company space. So everyone produce its factors, and on the right hand side you see what you call risks. So for those who study a bit, risk is equals to return. In other words, as much as good factors supporting a share price, it is reflected on the other side, on the mirror side. It's called the risk. So that's what it is. Yeah. So very quickly, what I hope to do is to bring down, in our anticipation, we'll work on the lower risk, which is the world, regional, and sector. Okay, so with that, we try to discover gems. Okay, so, oh yeah, okay. I don't know if you all know this. Yeah, when I did this, it looks like this. So I thought, those who like this rainbow cake, may like to. So this is one way to remember that it's all different risks. So one way to look very quickly, I don't have a lot of time. Oh my gosh, sorry, 45 minutes. Okay, quickly. Okay, I'm going to go very fast. Yeah, so we're going to get to the questions very quickly. Next year, what do we expect? What do we expect next year? So when we anticipate next year, we can figure out what we invest going forward. Okay, so what do you expect next year? Okay, one thing. Okay, reopening of economies. I know the economies are already opening, but now it's even opening further. Okay, because certain return of international travel is one of them. It has not started, but it looks like it's going to start soon. Yeah. So these are things. And rising interest rates is the other thing you want to look forward to. Explain that later very quickly when going to the reopening of economies. Now vaccination rates will climb, and now cannot tahan already. All countries will open. Okay. The last one standing is China. It is. What's going on, and then many sectors in the economy that has yet to recover from pre-COVID levels. Yeah, so that will be what it is. Yeah, at the moment. For example, international travel is one of them. Like I said. Okay, so not all the industries have recovered. Some have. Okay, so these are just headlines to tell you that the companies countries are reopening. US is going to open in November for vaccinated people. Australia, wow, Australia, right? Resisted so long. Now they've decided to live with COVID, yeah, which is the Delta. Delta is seriously strong, yeah. So that's what's happening. So opening. And New Zealand, you guys know New Zealand it was #1 in handling COVID. Now say, look, I have to abandon it. I'm going non-zero now because I have to open up. My economy is suffering. look, Singapore's economy is suffering, yeah, because of that too. So we are opening. I think Malaysia will be one country we want to open with. Yeah, so that's it. You know, we got to know that. One of the opportunities of opening is sets. For those who look, sets, go and take a look at it, look at valuations. It's one of the things that you may want to look at, and one of which is it's got net cash. Okay, so it's one good valuation point you want to look at. So look, this is it's still trading below its pre-COVID levels. It's when the economy opens, it's certainly a very good opportunity. Yeah. Okay, next will be SIA. Okay, no, SIA, for those who track SIA, look, when prices of any stock goes down, first thing you look at is price to book. When price to book is good, is below 1, look, it's something you want to take a look at. Okay, SIA, maybe you guys may hold back a little bit. Okay, rightly so, go ahead, hold back. Maybe, but next year you better look at it. This will be very, very interesting. Yeah, okay. So the other opportunity for opening of the economies will be, let me try to close some of the gaps, will be Genting. Okay, you know this, okay? Once it's open up, that means that we come ready. Okay, look, if you all believe that COVID will stop gambling behavior, then so be it. But those people who know that gambling behavior will always be there, and then Genting will be one that benefit most when it comes to market reopening. Okay, CDL Trust. Okay, this is a hospitality trust. This CDL Trust, I'm going to go to the next one, which is the FIS Trust. Okay, these two trusts are basically, again, both of them trading below COVID level price-wise. They are hospitality, in other words, hotels. Yeah, so once international travel up, these are the ones you want to take a look at. Okay, commerce, real estate, this will go up as well. This is CapitaLand integrated commercial trust. Again, it's one of the STI components. It's still trading below its COVID levels. Again, opportunity there. Please take a look. It's wonderful. Remember, I might give you its 1 year target. It's not 1 month target, please. Never 1 month target, right? Because it's not technical charting. Technical charts help you in the shorter term. More of macro things in the longer term, which give you a stretch time. It's easier for you 1 year or maybe 2 years. You see your gains. Maybe 3 commercial trust is another one. OUE commercial trust REIT is the other. Okay, so okay, remember I talked about rising interest rates. Okay, this will come, okay, because the Fed's already indicated the timing of its tapering. The first starting with the reduction of asset purchasing, which will start end of this year, and then next year we'll follow up with the rise in interest rates. So I'm just showing these dots, famous dots that Feds do show, tell you where the intent. You can see it 2021, 2022, you can see it going up already. Okay, so hey guys, it's coming. Interest rates are whether we like it or not. So impact banks. Okay, simple. Go straight one. Don't be too complicated. So straight one, you get your DBS. Okay, you get your OCBC and your UOB. Okay, all these things, all these 3 banks are good. Although in terms of valuation, OCBC and UOB looks better in terms of price to book. Go ahead, take a look at them. But nonetheless, these banks do not have Evergrande issues. Okay, so I know it's big out there. People think it's contagion and all, but both all 3 banks can say have no exposure to China troubled developer Evergrande. So good news. Kudos to these banks for being able to stay clear. So look, why not invest in world's best banks, right? I mean, looks like it can only benefit from a recovery or reopening, and of course, rise interest rates. Yeah. So all these are just I've shown you how good these banks are. Do note that they are top 3 in Southeast Asia. But let's say Maybank and CIMB come follows behind. So congratulations as well. But look, you want to go for the best banks you have in this region. Do come to invest in 3 banks. Fantastic opportunity. Again, riding on macro factors. Yeah. So okay, so that's it. I know I ran through the last part. I wish I could have time to go through every single one. It's so wonderful to give you some opportunities to tell me more. But I need to get to the questions. Remember, I want to really allocate some time to that. But now it's 11:18. Okay, so let's so basically what I've done is I've gone through all these three things I told you, and please do do this. Do this, get onto your phone, because when they push the information to you, you find very helpful. I find very helpful if you want to invest in Singapore using the SGX Invest Telegram. Yeah. Okay. So thank you very much. And I shall now open the time for questions. Okay. I will stop share my screen. Yes. Okay. Robin, go ahead. Robin. Yeah.
Yeah. Thank you, Mr. David, for sharing with us today. It was a very great and fun journey in discovering the gems with you in Singapore market. And I believe to all our viewers, thank you for tuning into this session. And to all our viewers, if you have any questions regarding trading in Singapore stock market, please type them out in the comment section, and we will start our Q&A session very soon. And before that, let me share my screen. If you want to know more about trading in Singapore, we have included the related links in the comment section and on the screen as well. So please feel free to visit the links, or you can scan the QR code right here for more information. If you want to receive the latest market insights through Telegram, we encourage you to follow the SGX Telegram channel. You can just search for SGX Invest in the Telegram app or scan the QR code right here. A quick reminder, should you choose to open a trading account with MQtrader, all you have to do is send us your contact details through the open account links in the comment section. Opening a trading account with MQtrader is free, as we will cover the account opening fees for you. You can also claim an extra 500 MQ points when your account is open if you sign up today. For MQtrader members who are RSVP'd, you can claim your 300 MQ points by completing the short quiz that we send right to your email after this. Remember to include a screenshot of the webinar in the quiz, and if you are yet to sign up for MQtrader account, remember to sign up now. And if you're interested about Singapore REITs, our previous webinar recordings are also available on our MQdemy and Facebook page. The QR code and links are on the screen. You may go and watch them after this. We'll be sending out today's webinar recordings to all who register for the event. For those who have not registered for the event and want the recording, you can register now by providing us your email address via the comment section, or send a request to MQtrader's email, which is admin@mqtrader.com, or to our WhatsApp number 012-805-8077. You can find all the information on the screen. Now let's move on to our Q&A session. Mr. David, here's my first question. As commodities are experiencing inflation, is that going to put pressure on Singapore's recovery post-pandemic?
Okay, I'm going to repeat the question. Is that there's the commodities, the prices of commodities going up the way it is for scary, right? Does it affect the recovery of Singapore's economy? Is that correct?
Yeah, post-pandemic.
Okay. The answer is, of course, it will in short term. Good news and bad news. The good news is, why is it that the commodities prices are going up? So sorry, that's a bad news, right? Price go up. But what's the good news? Good news is that demand supply. The supply is unable to match the demand. So what are we saying? What is the underlying message? Underlying message is that there is demand and exceeding demand. The supply shock. They didn't know that the demand is so strong post-COVID. So now across the regions, you read the newspaper, right? That that's a supply side. It's like, well, hey, what happened? You know, is it supposed to be COVID, right? Why is all this demand coming through? If you ask me, the quick take is that countries are now realizing that they cannot live with COVID the way they've done in a draconian manner. They have to relax, they have to open up, because the trades are dying. It's not sustainable, every country. So once that happens, you'll see the pent-up demand asking for resources, and that's what's going on. So yes, it does affect, but it's short term. So what does it mean? It means that opportunity, two counts. One is that you can take the commodities go up, but you need to get off, you need to get off the boat, which means that the stock market will affect it slightly, which also means that opportunities go in. So when you go in at low, guess what? Next year, when the supply side, of the factor adjusts itself to meet the demand, guess what happens? Everything goes back up, right? So I hope that the timing of this movement will help you in your investing. The answer is yes, it does, but also yes, it's also an opportunity for you to see where you can slot yourself in terms of investment. Okay, knowing that the underlying picture, the reason why the commodity price is going up is because of demand and supply, and there's a huge demand that's built up and therefore asking for it. Yeah, I hope that answered your question. Second question, please.
Okay, for the second question, how will Singapore be affected if the logistic crunch and power shortage situations are prolonged?
Sorry, say that again.
How will Singapore be affected if the logistic crunch and power shortage situations are prolonged?
Okay, so let's work backwards. Power shortage. Power shortage is basically in China, right? China, I think you know, they are already doing rolling blackouts. In other words, stop and all. So how does it affect Singapore? You know, Singapore is not affected by blackouts, okay? Because, you know, in Singapore, for those who don't know, there is a multi-year supply of gas for the Natuna area in Indonesia. It's piped in the gas, so there's no problem in Singapore. What affects Singapore is the trade. Now, as you know, the moment they have got rolling blackouts in China to restrict manufacturing, so what happens? The trade goes down, so affects Singapore, and therefore you will see lower revenue and therefore lower earnings, at least for this short 2-3 months. But you adjust, very quickly you adjust. The supply people are smart, they'll figure a way out to increase the supply and therefore address the problem. Okay, so one of the things that has exacerbated the situation in China is because of they want to fight the US, then not happy with Australia. Australia got a lot of coal, you know, but yeah, look, guys, sometimes it's also some underlying issue. There's some geopolitical play in it, behind it. I wish it's so straightforward as it's just between its economic problems, but we'll see how bad this geopolitical issue is. By the way, Australia got a lot of coal. It's just that they got to figure it out, you know. You know that Australia has joined UK and US in this UNCLOS deal, right? So China not happy, so you know, the retaliation is economic retaliation. So there you go. Okay, next question.
That's very insightful. Okay, moving on for the third question. Recently, the COVID-19 cases is increasing in Singapore. Do you think that it will affect the REITs market?
The REITs market? Well, yeah. No. Well, answer is no. At the end of the day, it's no. Because you see the counterbalance, right? So the COVID cases goes up, but then that's the reason behind the COVID going up is because they're opening up the economy. In other words, they're allowing more people to come in, the trade coming, you know, and in general, the trade will go up. In other words, the business will grow, right? Because they're relaxing the rules, people are coming in, and the consequence, of course, you have the cases of COVID and all, and that's more of a social and health problems. But economically, it's fine. I think for 1.5 years, Singapore is already, and in fact, Malaysia also, everywhere around the world have adjusted to it, all gone digital, you know. So I think it is not nice, the numbers, but economically, Singapore is fine. Look, other countries are worse off. Singapore, our numbers actually is minuscule compared to other countries, but because we're so conditioned to handle low cases, that any increase make us fearful, and we should. I mean, everybody's got views, you know, but economically, Singapore should not be that badly affected numbers wise. Sentiments wise, it does. So I think, you know, sentiments does affect the stock market, and therefore the market will be pull back not a fair bit, but just slightly. Again, opportunity, right? Look, at the end of the day, we all will have to live with this COVID. Every country has decided to do that. Get our vaccine and then move on. Now, the unfortunate thing about this are the older folks, right? They're affected, they'll die for sure. So I don't have the solution. I wish that every elderly don't have to die of COVID, but die of their own natural disease or other thing. But reality is that this Delta variant is very, very, very effective, very, very transmissive. Look, I don't know, so we have to live with it. So I don't know whether I answer your question. I saw that sentiment, yes, it does affect the stock market, but underlying the numbers will be good going forward. So look, so reach opportunity. So in other words, near term, it's a perfect time for you guys to think. In fact, you have time to think of what you want to invest in this month or two. By the third month, believe you me, this thing will be over. Yeah. By the third month, these 2 months will be sentiments will be bad, but which means entry opportunity. Okay, I hope that helps. Next.
I believe that eventually we all have to accept that we need to live with COVID, and hopefully the market sentiment will go back soon.
Yeah, you know, actually sometimes we have to be thankful. Look, you guys, I know, look at all MQ trade. Have you seen the MQ guys? All young people, they all probably will live through this, no problem. Okay, so the older guys like me, okay, I'm not that old, so I'm still okay. Be thankful about it. So yeah, but the older folks, we have to spare a thought for them, unfortunately, but it is what it is, right? You know, anyway, the economy is functioned by the younger people. So I hope that helps in thinking process. But sentiment is not good, yeah.
Yeah, we just have to live with it, and be always careful and stay safe, and always sanitize. Okay. Yeah. Okay, for the next question. What worldwide high sovereign debt will impact world economic and Singapore? US bull run those 12 years. Will a crisis be coming soon?
Oh, sorry. Say the first sentence again. The what?
What worldwide high sovereign debt will impact world economic and Singapore?
Oh, high sovereign debt affects Singapore.
Yeah.
Okay. And second question, second line.
US bull run those 12 years. Will a crisis be coming soon?
A crisis will be coming soon. Okay, good question. Okay, so high sovereign debt thing. Look, it's all relative. You know, it's all our sentiments, right? And when it comes to this aspect of high sovereign debt, how much is high? What is high? You know, every time I'm going to use US, I think we're all affected by what US is doing. The debt ceiling is keep going higher and higher. But in terms of percentage of the GDP, I think you all know it's still very much acceptable. So long as you can pay off your interest rates. Let's just flip it around, right? Property. Okay, so US is like a property. US forever will be, there's activity there, there's economy is going, and there'll always be taxes. In other words, there'll always be money, cash flow. If you flip it around and imagine this whole thing is a property. Now, if it's a property, you know you get your rent, right? Because activities, you get a rent and so on and so forth. But guess what? How much leverage do you do on your property? How much leverage can you pick on a property? 60%, 70%? Yeah, you can do that. 50%, let's say we want a conservative. REITs are 50%. Do you think that the debt ceiling is at 50% of GDP? Not quite. So if you take a look at that, there's a lot of room to go. That's it, it's uncomfortable where it is right now, the high debt ceiling and all, but it's all relative. So US spends, but guess what? US not the one who spends. Europe also spend. Guess what? Europe also not the only one spend. Japan spend also because of the pandemic. Look, guess what? Is Japan everyone? No. Australia spend, Malaysia spend, Singapore spend, everybody spend. So relatively, people accept that they had to spend. So therefore, there is no loss of confidence. Make sense? Because the other guy is poor, I'm poor, so everybody's poor, so no loss of confidence. So we need to watch this confidence part. I think the confidence is still there. This confidence is still there for the countries to pay up for the loans that they have. And I think there's still some way to go. Will there be a problem? Yes, there will be, for sure, right? How can you go on like this, right? You know, over 20 years ago, I was, more than 20 years ago, close to 30 years ago, I was in the US doing my MBA, and one of the questions was the same thing. You know, debt ceiling is keep pushing higher, and then they say that the system, the US Social Security system, will collapse in 2020. We've gone past that. So there were fears then already, 2 decades ago, about this high debt issue. But now look at where we are, right? People are still accepting. So I'm not saying there's not a problem. I'm saying it is a problem, but I'm saying that it needs the sentiment of that time. We need to consider that. And if the sentiment of the time is that relatively everybody's also in the same trouble, so guess what? They will just kick the can down the road as far as possible. How far can a can be kicked down the road? I think it's still some way to go personally, because if I use the property as example, I think it's go up to 50%, you still can do it. Not right now, it's only 20%, right? So, so it's not nice, but so what's next, right? We don't know, to be honest, but I trust the ingenuity of the US Fed. They'll figure a way out somehow, some way. One of the ways to have a generic haircut, by the way, is it is a haircut, 10% haircut, everybody, so everybody don't feel anything. It's equal pain, you know. Then you'll probably get there. I don't know whether we get it in a lifetime. So in other words, we probably about another 30 years. I don't know whether I get there in a 30 years time, but we may not. But at least the next 10 years, I think it's still okay. As far as the bull run is concerned, the bull run was stopped, okay, prematurely by the COVID. So actually, the COVID basically restart the whole cycle again. So you probably have another 10 years of run from here before you see a meaningful pullback of recessionary pullback. So next year or year after, you may see some pullback, but it's not your recessionary pullback. It's just we're actually in the middle of a economic recovery from the forced closure of the economies because of the COVID. So I hope I answered the question. The answer is no, it's unlikely it's going to happen, affect anyone, because people are everybody, it's equal pain. So nobody is losing any confidence in the currency. And then, as far as the rising bull market, whether it be a pullback, and the magnitude of minus 30% is unlikely in the short term. When you start shopping in the next 3 years. So, but it will come, it must come, you know, historically, the market corrects more than 30%, about 30% and more, at least in Dow Jones are concerned, in the past 10 years, over once every 10 years it happens. So, so it happened last year. So you start calculating, the clock resets itself already. Now it's the first year. So we've got another 9 years to go. Thereabouts, not precise, please. It's always roughly one. Don't take it as a precise instrument. So we have to watch the time when it comes, watch it with, you know, what other factors could create the next pullback, next minus 30% pullback. But again, today as we speak, it's unlikely for the next 2-3 years for a 30% pullback. It could be a 10% pullback, but not a 30% pullback. Okay, next, I hope I answered the question. Next.
I really love the way you answer the questions. So for the last question, due to the money printing, yes, it's facing high inflation and could be stagflation later. how does it impact worldwide economy and Singapore per se?
Okay, stagflation, good question. How does a stagflation turn about? So maybe a bit of explanation for those who don't understand that the person who asked this question is a very, very learned guy. He knows what he's talking about. And I hope I can give you a good answer, because it's not easy question, because how do we even end up in a stagflation? Stagflation means, for those who don't know, there is inflation, but the economy is stagnant. So how does that even happen? It happens if the economic activity within the country doesn't perform as well. And therefore, underlying reasons, I think you know the reasons why a country stagnates. It's because of many reasons. That productivity is one of them. And then, of course, underlying demand supply is not there. The demand somehow is not better than it was the year before, right? So if it's not year before, it means it stagnates, right? So go back to very fundamental principles of demand supply. We have to go back to that. By the way, it's very powerful if you understand demand supply. I hope you all really understand demand supply, because by understanding demand supply and the reasons for the demand and reasons for supply, you really could have a good grasp on the whole situation of the economy. So let's get to it. So an economy stagnates because there's no growth, right? Growth. So that means the demand is stuck. So why is the demand stuck? So the question is, why is it there is a demand why is demand stagnant? Why is it level off? So once you address that, you can address whether there's a deflation. So the question, is there a problem with demand? Do you see a demand holding back, at least in the near term? You can figure that out. Now, so once you figure that out, then you figure out this called productivity as well. Productivity has to be there. So are we being more productive? Can we, produce more for less? So these two things are going on at the same time. So one of the simple things of the demand supply has two components. And one is population growth. We need to see population growth. I mean, we imagine, right, when the population grows, guess what happens? More demand. So we have to see. So what we want to watch for is population growth. And if you can, by the way, you can read this in Warren Buffett. MQdemy, like to quote Warren Buffett. Read his comments, especially during crisis. I'll say that again. Read Warren Buffett's comments, especially during crisis, because that's where he reveals all what he looks out for in the functioning of the economy, therefore in the businesses, and therefore in the stock price. Watch that. One thing he said in the last time in the financial crisis was population. He says, see, that's just because in the middle of crisis, right, Lehman crisis. So he said, he says, and say, oh well, I trust US. US continues to grow because look, population is growing at 0.35%. Productivity will be there. So he says in such a old and fatherly manner, but there is a lot of wisdom in it if you understand it and therefore track the population growth. The moment population tails off, you see trouble. Where? Japan. Japan, right? It was at its height in 1980. So what happened? And you can see very clearly there's a population issue there. Now, population issue, if you go down to deeper, of course, the producing population versus, the working population versus the non-working population. In other words, it is aging, it's not producing, it's equivalent to a stagnation in demand supply internally. Make sense? I hope I'm making sense. So that's why China reversed its policy. That's quickly, because they're smart guys, they can see it, they can't be below 2 all the time. They quickly change it. 2, then now more than 2, you can afford it, right? Something like that. I can't remember, but there you go. Quickly away from one-child policy. Same thing in Singapore. Singapore had this stop at 2. Guess what? We went below 2, and now we're in trouble. And how does Singapore do it? How does Singapore keep its GDP growth? For those who are smart, those economies out there who are listening in, you know the answer. You tell me. What Singapore did was that we started to import foreign workers. We start to bring in PRs. Thank you for those Malaysians who come over. Thank you so much. It helped us a lot. So you take a look at the real citizenship of Singapore. It's only 3 million, 3.5. But the whole population of Singapore is 5.5. Where the other ones come from? People, PRs, foreign workers, migrant workers. All these are functioning population. They are producing population, which help the economic growth of Singapore. What was I? Okay, yes, population. So watch the population, especially it's growing. And once you see that, then will it stagnate. So take a look at US. So we have to look at US because US is still the largest economy in the world, still the largest consuming population in the world. Whatever it consumes, it pulls the rest of the world together with it. So we need to watch that. So is the US growing in terms of population? Answer is yes, right? Of course it is. Because why? The borders are free. The Mexican, Guatemalans are all coming through the borders. But nonetheless, it's growing. And because it's growing, you can see the US economy continues to grow. And not only that, we're experiencing currently this amazing time. Stock market goes up, but not because there's no, some people say it's money and all. It's not. There are very good underlying reasons behind it, and one of which is productivity. And the economy, the internet and it's all it's given us the exponential growth in productivity. If you could recall, again, you read Warren Buffett, you'll understand about this productivity. He equated 1990s, the growth. Have you seen S&P 500 grew? It's like shot like this, it's like very steep climb in 1990s. And Warren Buffett equated that growth spurt in the stock market in terms of productivity, equated to the railroad expansion at turn of the century, or just before in the US. When railroads go to spread to the inlands of the US, it creates productivity. In other words, it links. Things can move faster and everything, right? So during 1990s, what was that factor that created productivity? You guys know it. It's called PC. Yes, the personal computer. Swath, rooms of people who used to do simple calculating reduced suddenly to one small room. Why? The PC can have done it. So then our productivity went up. There you go. So that is so powerful. So the stock market went up because of that. Economy went up. Everything went up. So now we're experiencing it. The decade we're experiencing this very powerful internet connection, cloud computing. Suddenly we are freed, and all of us, look at us. Where are we talking now? Zoom. Oh my gosh! Last time we used to be. I used to fly over Malaysia, not you guys, but I used to fly to Malaysia to give talks. Now I'm doing in Singapore. You guys are listening in. Comfort of your room, technology, productivity. I don't even have to go off to another hotel to add on a bit and fly back to Singapore to end this talk. I just turn off the computer. That's the end. That's productivity. I run to do my own things. You do your own things. The moment you turn off your computer, immediately you zoom off to your lunch or whatever your favorite lunch or whatever it is. But guess what? That's productivity. You don't have to walk off a room. But of course, no free lunch. Last time we got this thing, we got free lunches. We go and pick up free lunch. Now you go have your own lunches. Yes, and it's cheaper for MQ trader. See productivity, right? How much does it take for you to come up with this Zoom? Cheap. Can you imagine they have to come up with lunch for you guys to go in a room, then rent a room, and then you can fly me over to give a talk? So expensive. So there you go. The explosion of activity, productivity we have experienced right now. So you put them all together and you figure out whether it's stagflation. I know I'm going myself. You figure out what's really stagflation. So yeah, think about it. Okay, so put that stagflation aside. Now the question of printing money. When they say print money, you have to think carefully what I mean by print money. So printing money, what does that affect? When we print money, the way we understand it, economics 101 is that the money will devalue becomes banana money, correct? Now, how does it become money? It's because, let's say a country, Zimbabwe, keep printing money. What happens? It becomes banana. It goes up, inflation goes up. But all these things we understand that economics 101 comes true, except they didn't teach us the exception. The exception to the rule today is called US dollar. US dollar can print all they want. Guess what? It won't go banana. Why? Because the rest of the world, the reserve currency is US, part of it is US. In other words, give an example, Singapore dollar, if we could use Singapore dollar, it's Singapore $10, and the $10 backed up by assets. What are assets? Gold. Singapore used to purely gold, but we have moved away from gold. We have just, part of it is backed by gold, the $10 Singapore backed by gold, but also other foreign currencies. Has got your your yen, it's got your renminbi, it's got Malaysian ringgit. Hey, Singapore keep Malaysian ringgit. We keep Malaysian ringgit, we keep it, but also keep US dollar. We keep US dollar as to prove that this $10 is worth $10. So can you imagine if this US print, all across the world, everybody has US dollar, by the way, as a reserve currency. So if it cheapens, what happens to Singapore currency? Singapore currency cheapens as well. So everybody's the same boat, so all die together, So exception to the rule of banana printing is US dollar, because it's the reserve currency of the rest of the world and everybody uses it. So to your question, they can print all they want and nothing happens. Okay, it's a truth. So I hope that you take away from what it is. US dollar can print all they want, but they are smart. They don't do it excessively. The US are a very bunch of very brilliant. Ben Bernanke was one of the brilliant guys. I'm not sure what Janet Yellen is. So Janet Yellen, I don't know what she's doing, but Ben Bernanke is good. Jerome Powell is fantastic. But I love Ben Bernanke. He is the creative guy. He is in charge. I'll be happy. But so of course, it's 2 chairmen ago, so it isn't exactly the guy. But Jerome Powell is doing a great job. So yeah. So I hope I answered the question of printing, stagflation. So in net, I hope you can come to a conclusion that it's unlikely we're going through that, because the Fed is quite smart. They'll probably figure out what's going on, and they will adjust accordingly to make sure that the economy don't fall into stagflation. And certainly it's part of their mandate, the Fed mandate, to make sure there's stable currency, and a reasonable employment in the US. So they've become very active, and the Feds are very smart people. They'll figure a way out. So for us, I think for the moment, the probability of stagflation, it's not high. Okay, so that's what I can tell you based on those underlying reasons, based on those underlying things I've said. Yeah, so I hope that helps. Okay, Robin, that's it.
Thank you so much, Mr. David. I believe that all our viewers are very satisfied and have learned so much from your answers and your sharings. And I think that's all for our session today. If you would like to watch a replay of this session, it will be available on our MQdemy and Facebook page. We'll also be sending out today's webinar recording links through links to those who have registered with us. If you have any other inquiries, you can also contact us on our MQtrader Facebook page, Instagram, or even i3 Messenger. Don't forget to complete the short quiz after the webinar ends. For those who want to open a trading account with MQtrader, remember to do so now. You can find all the links in the comment section, and we'll keep this webinar live for another 10 minutes or so that you can refer to the links again. I will stay here for another 5 minutes in case anyone has any questions regarding MQtrader. I am very happy to answer them. Thank you, Mr. David, and thank you everyone for participating in this webinar and making it a successful one. And that's a wrap for our webinar today.
Thank you.
Yeah, thank you. Please feel free to send any of your inquiries regarding MQtrader in the chat box. And just a quick reminder, should you choose to open a trading account with MQtrader, all you have to do is send us your contact details through the open account links in the comment section. Opening a trading account with MQtrader is free, as we will cover the account opening fees for you. And you can claim an extra 500 MQ points when your account is open if you sign up today. MQtrader stands for Malaysia's Quantitative Trader Group. And we provide quantitative methods to our traders. There are links above, and you can visit a link to take a look at our system. And also for our MQtrader stock analysis system, we've included wonderful trading strategies in it. It can also compute buy and sell signals based on the strategies that we included. Usually they will appear as green and red arrows right there. And if any one of you are interested in Singapore REITs, our previous webinar recordings are also available on our MQdemy and Facebook page. The QR code and links are on the screen, and you can go and watch them after this. We will also be sending out today's webinar recordings to all who register for the event. And for those who have not registered for the event and want the recording, you can register now by providing us your email address by the comment section, or send a request to MQTraders email, which is admin@mqtrader.com, or to our WhatsApp number 012-805-8077. Once again, you can find all the information on the screen. And also, if you join our MQtrader member, you'll be entitled to get all these exciting benefits as shown on the screen. So feel free to visit the link for more information. Now that sums up for our webinar today. Thank you, and I hope to see you all in our next webinar. I will leave the webinar now, and once again, this is Robin from MQtrader. Enjoy the weekend and stay safe. Bye-bye.
Thanks for watching.